Hello everyone, this is Miltos Savvidis. I'm doing my weekly trading roadmap for the week starting 20th of April 2015. So let's get stuck into it. This weekend, actually today on Sunday, I'm recording this on a Sunday night, by the way. China cut its triple R by 100 basis points, so 1 full %. Now, I mean, a cut this month was somewhat expected. Um, however, 100 basis points I think is a pretty aggressive move. I think normal increments are either 25 basis points or 50 basis points normally. So 100 basis points is quite aggressive from an easing standpoint. Um, and there was somewhat expected. Obviously, this week we had the slowest growth in China. It came in at 7%. The GDP came in at 7%, which is the slowest growth we've seen in pretty much since the beginning of 2009, in the midst of the financial crisis. And at the minute, I think some of their, obviously, central bankers and the governor and the government's kind of not panicking, but being a little bit cautious now, and they're trying to revive that growth that they were seeing. Obviously, with kind of a global slowdown at the minute, China's getting affected because it's a very, very big exporter. And we did see somewhat of these expectations, being baked in, but 100 basis points, like I said, is pretty aggressive. So I'm going to be expecting some pretty interesting moves coming into this week, especially with the fact that on Friday we had some very, very big risk-off flows. Whatever those flows were really down to, whether it was some worries of Greece, or possibly was the regulatory move in China to remove margin trading with these particular trusts. There was some significant risk off moves on Friday. So that's obviously put equity markets, for example, a lot lower come the Friday close, and I'm expecting coming into this week we're going to see a little bit more risk on moves come Monday at least, or at least a move, or maybe some gaps higher from the close. There should theoretically be those kind of moves, and that's kind of what I'm going to be playing for. The markets to be paying attention to, to really to gauge these moves. I'd definitely be looking at your Aussie dollar. So as it stands, we went through the market structure on Friday. We saw this triple bottom. Obviously, we didn't get that rate cut in April. We also had the really good job numbers that came out last week. It set us on this, pretty bullish tone. We made a higher swing low. Now we're making higher swing highs. We're back into this bit of a that flag formation, which we couldn't really, sustain to the downside. We're back inside it. You can see there's one touch, two touches, and made a bit of a low in here, and it's also made a swing high. We've also come and touched that on Friday. So I'm really looking at these areas. Obviously, since I took the snapshot about 10-15 minutes ago, you can see the markets opened up quite a bit higher, which is what you would have been expecting the Aussie dollar to be strengthening on that kind of news. So really to gauge these moves coming into Monday and the rest of the week, you want to be keeping your Aussie dollar up, seeing if that's actually getting any sort of price fluctuations to the upside or to the downside, if it's kind of moving back down. But from an equity perspective, I'm going to be keeping an eye very closely on the FTSE 100. Obviously, across the spectrum of equities, you would be expecting some risk on flows. Now, with the FTSE 100 predominantly being made up of energy majors and miners, anything that comes out of China really does affect your miners, your iron ore, copper. So I'm going to be looking from an equity index standpoint at the FTSE as my gauge to this news. And obviously, as Dan went through on Friday, we had that pretty bearish candle. Obviously, OPEX squeezed a lot of those those shorts out, and then we finally had that pretty big move to the downside. The levels that I'm looking at is these 69.74s in here. This is the cash market. Looking at that high in there, we've kind of just come short of that on Friday. I'm also looking at these 70.60s in here, which is pretty much this previous high up here. And then just below here, we had these two lows and closes, and also an open from Friday. Around this area, really, if we can start finding a bid, if we do actually find a bid, which I'm expecting us to open higher than this close, if we do manage to find a bid and hold above these 70.60s, I'm fully expecting this to rotate and auction back up to these recent highs at 71.19s. Again, if we can't hold that bid above here, then I'm going to start getting worried and possibly looking for some more rotations, maybe a re-auction back down to these 69.74s. If we break through that, then I'm looking, at this area in here. I don't have it lined out exactly, but it looks like it's like about 69.15s-ish, which coincides with these little highs in here. Obviously, this line here and that line that we have here, if you scrunch that up on a bigger time frame, that's a very, very big wedge formation, and I've just kind of extended that out just to make you guys, keep that clear. In any case, those are the two pretty much the markets from an equity and an FX standpoint that I'm looking at. Obviously, I'm not looking so much at the bond market with this kind of news. Obviously, come the European session, the bonds being so compressed, especially the Bund, I'm not really looking to trade that. However, you could see some risk-on flows, so then you might find a bit of an offer in the Bunds, the T-notes, etc., etc. Any case, let's move over to Monday. Obviously, Monday not too much on the data front. We've got German PPIs. We also got the European construction output, but I haven't put that in because it just doesn't move the market at all. Central bank policy, we've got the ECB's Constancio. He's a leading dove. Definitely look out for what he's saying. Not like what ECB members are moving the market as much, but just keep an eye on, see if he's going to mention anything with regards to QE, economic outlook, and inflation. On a market structure perspective, obviously on Mondays I always go through EUROSTOXX and Bund. So let's take a look at the EUROSTOXX first. This is a daily chart of the EUROSTOXX, and you can see we were kind of trending up in this channel for pretty much since the beginning of the year. We took off, started trending higher. EUROSTOXX has been outperforming a lot of European indices, and what we had obviously on Friday was a really, really big move to the downside. We got through basically, once we had gotten through these 36, 70s, about 75, 77s. So a really key area in here. And you got these 36, 79s as well, which is the previous high. And we got through that. We really pushed lower. We pushed through these this trend line support, and there was a lot of volume on the way down. It was just a lot of paying down. Obviously, a lot of the buying that took place in here and up at these highs in here, and on the way down, we'd filled in that gap in here. We've re-entered this value area, and I've drawn a little bit of a box around this this what you can call a base, obviously a market structure that we can lean on. And from this this profile that I built around it, I just basically put a box around it, and on CQG it'll give you the value area high, value area low, and the POC, the point of control, which is the blue line, which is quite a bit higher. But what's interesting to note is I've got the value area high of this box area at 36.56. That's also the previous gap close. So look out for that area. And then to the downside, I've got these 35.92s, which coincidentally or not is the low of Friday, or 35.91 I think is the low of Friday. In any case, that is the low, or the value area low of this little box area. I'm keeping an eye on how the market's going to auction around these levels quite keenly, and I think you guys probably should at least keep an eye on it too. And just looking at it from a market profile perspective, obviously we've gone through a few of these levels, but I'm looking at these 36.77s. That's last week's value area low. as we said, that was kind of where we started. Once we started pushing through that with volume, after the EUROSTOXX OPEX, or during the EUROSTOXX OPEX, once we started pushing through that volume, that's where we initiated that move, that really big move to the downside. I think that area 36.77 is going to be very, very key if and when we get up there. And I'm looking at that area very keenly. Again, I'm looking at these 36.63s, which is the value area of 2 weeks ago. These 63s was really, really important. We paused here for a bit where we turned a really, really high um, number of contracts at 62, 63s, and 64s. Basically, this area here was churned a lot. And if you look back on your delta, which I went through on my market wrap on Friday, you'll see a lot of volume through these areas. I'm going to be looking at this area again to see if there's any sort of sellers stepping in. Then to the downside, we've got these 36.35s in here. That's the value area low of 2 weeks ago. I didn't put it in, but these 36.30s, Josh was also talking about. It's the I think it's the VPOC or the composite high volume node for that very big area, and he said he was looking at that area. I think that area is going to be quite key as well. For me, I'm just going to be basically looking at these 35s for a bit more confirmation. And then to the downside, I'm looking pretty much at these 36.03s, which is the first area we came to on that really big move down, which we couldn't really break up until later on in the afternoon. And again, I'm mentioning these 35.92s. I think they're going to be quite crucial. Below that, I've got these levels at 35.82s, which I thought was a pretty key level. But for me, these sorry, is that 35? That's 35.82 and 35.74. These 35.74s, I'm not going to go back and show you, but it's a very, very low volume node, and it seems like a very good pivot point. I'm looking at that level if we do get down there, quite acutely, to see if we can see any sort of at least quick bids. And I wouldn't expect it really to trade at 74s. If anything, I'd be bidding 76 and 75, front running the level. These low volume nodes, they don't really trade. They're a low volume node for a reason, because the market doesn't really want to trade there. So I wouldn't, if you did want to play that level, I think it would be quite foolish to actually bid 74, 73s. If it goes through that, then it's probably not really looking very good. In any case, from an auction theory perspective, now it's going to be very, very hard to say where this market's going to be opening. I'd expect, again, with the Chinese rate cut decision, come Monday, we're probably going to be opening up quite a bit higher than the close. It's going to be very dependent. I mean, how we auction. I think from 8 o'clock onwards, just because of the FTSE, like I mentioned before. So for me, in my trade plan, I'm not really looking to commit to any directional trades until the cash comes in. Obviously, most traders do lean on the cash sessions quite heavily, but I'd be leaning more so just because the FTSE is going to come in around 8 o'clock, and I want to see how the FTSE is going to react to this, because I think the FTSE could definitely outperform all the other equity indices like the EUROSTOXX and DAX. But if it's really moving, then I think I'm going to, even if it's not moving, if it's actually, blips up and then starts selling off quite heavily, I think you could get a really good entry in on some of the, the markets that should be underperforming on that kind of news, like the EUROSTOXX. So from an auction perspective, if we start getting above these 36, 35s in here, this is a really big gaping cave of volume and value. So I would expect this to start, auctioning out. And you've seen before around these levels, around these 36.45s, 36.46s, this big chunk in here, it's done a lot of volume, it's shown a lot of acceptance. So if we do get above here, I'd expect the market to gravitate around areas that it's already previously accepted. So that's going to be kind of a hypothesis I'm playing for. Again, if we can't actually find bids above here, and the market does actually seem like it wants to offer down, well then I'm looking more towards these lower areas, and again these 35.92s I think are going to be kind of key, just to see how we auction around it. for me again, to the upside, I'm definitely looking at these 63s and 77s. That for me is such a key area. In this area, I think, if we can't hold an offer below these 63s and then come up to these 77s, I'm going to be looking for patterns such as, a head and shoulders or something. Maybe we pop through it, get back up, find an offer at 77s, make a head and shoulders, and then, make our way back down. These are the kind of formations and setups I'm going to be looking for in and around these areas. Because I think there could be some good playing, some good setups in play come this week. So, moving on to the Bunds, not really much to talk about in the Bunds. I mean, very clearly the market is moving higher and higher and higher, even though we've had this bit of a swing rebound. Looks like a bit of a selling tail. For me, the last day on Friday, we didn't really get a spike up in volume. So for me, it just does not look like an exhaustion candle yet. If you're looking to be a seller in this market, it's not showing you, those signs. Back here where we were still closing below these highs, and there was a bit of a hypothesis for that. You could say so, but even then we pushed higher. So I'm not looking to be a seller in this market unless I actually see a move with exhaustion volume. And when I say exhaustion volume, I mean something even probably along these ranges, on a daily basis, something along that. So, million and a half, 2 million, something probably even more than that. Maybe a big spike, something that would, where there's actual euphoria in the market. But in any case, let's look at the market profile just to get a bit more perspective. Obviously, it was a very big week last week to the upside, so I had to kind of scrunch this. Every TPO difference is 2 ticks, not 1. Just so you guys can get a bit of better picture of what I'm looking at. So I'm looking predominantly at these 160 18s. That's last week's value area high. And of course, these basically between 160 and 160.06-ish. There's bit of low volume in here. It's low TPO count. Seeing how the market might react in here, we saw a bit of a inflection in that area. But for me, I like this area down here around. I think that's 159.86s or 88s. Around this area, we've got the 50% of last week. Bit of low volume tucked in there as well, so we could see a bit of a reaction off there. But if we do get back inside here, we could be looking for rotation back down. For me, the really key area and an area that I would look to be a buyer, or at least to see if there's any buying action, is around these 159.44s. That's the area where we, that sparked that move up to, to the upside. What's interesting to see is that the VPOC of last week is actually quite a bit lower, at around 149.48-ish. Again, around that area. So, we've got to, just move up, close quite high, but the VPOC hasn't really shifted on that week. So it doesn't look too strong up here. Most of the structure of this week is, to the downside, and we've got this bit of a lack of value in the middle here. So there could be scope for this market to come and find some value in here. But again, I'd be looking for a bit more confirmation before I'm a seller in that market. Looking over at Tuesday, nothing really much on the data front apart from German zoo. But again, that hasn't really been moving the market that much. I'd only really be looking for some major outliers, like 2 standard deviation outliers to trade that. Anything less than that, I'm not really looking to hit that at all. From a central bank policy perspective, with the RBA minutes, just keep a look at an eye out on that, just to see if there's any sort of clues on when the RBA is actually looking to cut, if they are going to cut. Obviously, we didn't get the cut last month. They didn't have the employment data, or at least I don't think they had the employment data in the last meeting. So, possibly anything that indicated towards a move in May could be a fade. Bear that in mind. Just bear that in mind, because we did get that pretty big strong jobs report, which moved a great deal in the expectations of a rate cut in May. Looking on Wednesday, we've got the Australian CPI, US existing home sales, and the DOE crude oil inventories as always. and a central bank policy perspective with the BOE's MPC minutes. Now, from the minutes perspective, not really looking for much. The BOE's become really, really lackluster as of late. The only thing really that would move the market is if we get any, changing the voting structure, which at the minute I think are firmly at 9-0. So, any sort of move there could move the market. Possibly, you would see a move up in the cable. But let's just take a look at the cable anyway. Not only from an event-driven risk perspective, but just from the way the market's kind of looking. And I was looking at this, tonight. And it's just interesting to see how this market's been trending to the downside, because I saw something very similar in the Bund last year where it was trending to the upside, and the trend, usually when you have a range, you can put in sort of the middle ground or the value area, and then areas where the market doesn't seem to find value in that trend, and it gets mean reverts back to the center of, yeah, I guess if you put moving average around this, you might see some sort of pattern. But at the end of the day, the market's trending lower, but in areas in the middle, it seems like it's more comfortable to trade. Anything in this top tier right here is sold, and when it is sold, it's sold quite aggressively, as you can see here. And then anything in this downside value area region can't really sustain, and it seems like it's getting bought right back up in here. So I've just drawn in these lines. I'm not particularly playing these lines per se, but I'm looking more to see what the reaction is around these areas, and then seeing how that affects my plan. But nonetheless, the way we've closed, obviously last week we saw a really big run up in the cable to the upside. It hasn't really been able to sustain that offer. You see these key levels for me, obviously these 146.26, which we couldn't sustain an offer below. Obviously the recent low at 145.57. To the upside, the swing high from Friday, 150.48, and then these 149.87s you can see here has been quite a crucial little level. Swing lows in here, a couple of swing highs in there. So I'm looking at the reaction if we can get back above here. This, for me, is the kind of swing rebound that I like more. It comes up, closes back inside this sort of area, so I could expect this to move right back into the center of value for this sort of box area. So just keep an eye on this structure. It looks pretty interesting. Possibly if we get up into these areas here, that could be more of a sell indication. Anything below here, and then we get back up in here, that could be a quick buy indication. If that relationship breaks down, then there could be a change in the character of the trend. So just bear that in mind. Just because I'm pointing this out doesn't mean it's going to stand. It's just to give yourself bearings, and then if you see something change, you can react to that pretty quickly. Looking really quickly at WTI Crude Oil, obviously we've seen a really swift run up in the crude oil market. I did a bit of a rundown on that on Friday in my weekly market wrap, so you can take a look at that. But at the minute, we're firmly above these 54 bucks, which is a level I was looking at for quite a while. Obviously, the market's been looking at that for quite a while as well. And the way we're standing, obviously, we've got a bit of a bull flag going on in here. I'd expect with this Chinese rate cut news, this market should find a bid. Theoretically, should find a bid, and because of this structure, it should, relatively easily push to the upside. Now, the next target, if we do see a move to the upside, is around these 58.98. It's basically around 59 bucks. You've seen a pretty interesting reaction around this area. A lot of, once we got inside that area, we kept selling off. So I'm looking at least at the next point for some sell side resistance around these 59 bucks. So just bear that in mind. Obviously, to the downside, firmly looking at these 54.24s for that to turn into support after it being a very, very strong resistance. So I think those are your main bearings for this market. Keep those areas in mind and always remember them if you're trading it. So moving really quickly over to Thursday, we've got the Chinese HSBC manufacturing PMI consensus currently is at 49.4. So it's currently expected to be contractionary. But definitely 100% look out at this figure. China is becoming more and more of a big story. And I have this sort of feeling, obviously we've had the rate cut, but it could be that China could be becoming you know, a lot bigger on traders' agendas in the weeks and months ahead. Obviously, we've seen, they're moving. The government showing that they want to do stimulus. The PBOC actually doing something about these weaker data points. Look at the data points because obviously the central bank is looking at the data points. So it's super, super important. This is going to be a leading indicator on your GDP. GDP is obviously a lagging indicator. So, the market's going to be firmly looking at these PMIs to see if there's any indication of further downside in this. But having said that, if we start getting the weaker numbers, because we've seen them do stimulus, as a reaction to weaker numbers, it could just be that weaker numbers. It could be that that bad news is good news for the markets. So bear that in mind. If we do see a much weaker number, the markets sort of sell off. We see a bit of a risk-off reaction. There could be hedge funds or speculators stepping in saying, okay, well, I think they could be cutting another 10, 20 times this year. I've been reading market reports. Analysts are calling for another 10, 20 rate cuts this year. Or I've read this other article where they say they should be cutting another 200 times in the next 5 years. So there is expectation for that. If we see weaker data, there could be that reverse flow. So just definitely mind that that dynamic and how it plays out. Obviously, any figures to the upside, we could see a small unraveling of some of the moves we've seen recently, but keep that in mind. I think these numbers are going to start getting bigger and bigger shelf life. So after that, we've got the French, the German, or just basically the European manufacturing PMIs. Those are preliminary numbers, so they're going to move the market a lot more than the second, third, and final readings. Pay attention to those to see. We've been getting better data out of Europe, so just see how that affects your Euro, Bunds, Euro stocks. Not like it's going to really change the picture of QE, but just bear it in mind because even though we've just embarked on it, there has been a small amount of talk, market chatter, not from the ECB, but from market participants talking about when they might taper, when they might stop, if they might stop earlier than September 2016, etc., etc., etc. After that, we've got UK retail sales. We've got the US initial jobless claims, US manufacturing PMI, and US new home sales all on the same day. So quite a busy day from the data point perspective. Then we've got the ECB's Pret. He stands in the middle of the hawk-dove spectrum. And just from a market profile perspective, I just wanted to highlight the euro dollar at the minute. Obviously, a lot of the traders were looking at this. There was a bit of you'd say, a wedge formation. If you connected the low here with the low here, and you drew that trend line across this way, and then a trend line up the top here, you could see that wedge formation and how we broke through it. And for me, once we didn't actually take out that low, obviously you have to take out this low for the trend, that flag, to be confirmed. We didn't. And what was interesting to see is actually on the way down, you could see these 2 days were these 2 days in here as we broke the flag, and then these 2 days here we actually dropped off in volume. So if you wanted to see a good trend continuation, you would expect these two candles, as we're getting closer to these lows, more and more people wanting to get involved and volume to be increasing steadily. On the contrary, we flip reversed, started moving to the upside, and we're actually increasing volume to the upside. So for me, very, very simply, this is just a very, very big range. I'm not looking at that flag anymore, in my view, but I'm more looking at the bigger picture flag. So if you actually take this, redraw it, so you've got this low and this low, that high and that high, that for me is your consolidation, that for me is your coil. And if you take a big box around this area. We've got your point of control down here in this level, just above 106. And then your value area low, coincidentally again, seems to be at the low of, well, that recent swing low that we've seen at 105.29. So that's really interesting to see. Again, that is, sort of coming to fruition. To the upside now, we've already gotten pretty much very close to that uh, this profile area, value area high at 108.63. So I'm looking at the reaction around here. Maybe if we can't find a bit above here, we start rolling back over, we could see this just kind of balancing out and filling in some of this volume. Remember, this is the FOMC day. It seems like this market's just sort of auctioning its way around it and finding where there are stronger buyers or stronger sellers. I think once we've coiled enough in this area, we're going to see a decent break. Firmly the trend is to the downside, so definitely bear that in mind. Looking over at Friday, we've got the German IFO. Hasn't been moving the market at all, but I'm putting it in anyway. Again, I'm only looking for anything bigger than a 2 standard deviation move in that to see any sort of major market moves. And of course, US durable goods orders, looking out for that. Obviously, that is an indicator or a litmus test on the demand side of the US economy. So that could be quite good and quite market moving. Definitely keep an eye on that. From a geopolitical standpoint, we've got the Eurogroup meeting. I'm not quite sure if Greece is on the agenda, but I'm not sure. But if I had to put my money on it, Greece will definitely be on the agenda. So coming into Friday, if we're not getting a lot of good news per se, and we're seeing, a little bit of speculation about Greece again, definitely keep your eye on the Greek bond markets. That is where we're seeing, a lot of the reaction. If you're seeing, 3-year spread starting to widen incredibly, or the 10-year moving, 100 basis points, don't get, ball deep long your equity markets, your European equity markets. Just be careful, because that's been driving a lot of flow recently. And obviously, towards the end of the month, I think the beginning of next month, they have their first loan, or at least their first one of their repayments coming up to the IMF. I think it's about 200 million. So keep an eye out on that to see how that rhetoric continues. Just looking really quickly at one of the market structures, the S&P 500 futures. Really, really interesting market. Very, very frustrating to look at. I haven't been trading it recently, but it just looks like just all over the place, really. It looks, for me and for a while, to a lot of the traders in the office, has been looking quite bearish. It looks like this low here, 20.33s and a quarter, just cannot stay. Yet again, it does these incredible big rallies to the upside and just squeezes absolutely everyone out. But in any case, this is how I think this is a weekly chart, if I'm not mistaken. Yeah, I think it is a weekly chart. But in any case, this is how we're panning out. We closed below those 2081s and 3/4, which was the really key level that we were looking at for quite some time now. So we've closed below that. It's going to be interesting to see how we end up, towards the end of the week again. We should see some risk-on flows with this Chinese rate cut, but we haven't really been able to close above this area again. So theoretically, the way this is looking for me, if we can hold an offer below these 81s and 3/4, I don't see why we can't rotate back down and move, closer to these, 2050s, or even these 2045s, 2044s, which we saw was a really key pivot area. But again, if we can close above this area and start bidding in this area, finding a bit of value up here, I firmly think this is going to, take out this recent all-time high. On the contrary, as it stands, I'm still looking for this market to move and rotate lower. But that is yet to be seen, and the S&P can do some ridiculous moves. So keep an eye out on that market. From a risk and money management plan perspective, Monday we got about 2 event-driven risks, but I've put the Chinese rate cut as part of Monday's flow, so that's of high relevance. I'm allocating quite a bit of risk, but again, that's going to be highly dependent on if the market's actually showing interest in this. I would expect the market to. But if the volumes die down by 9 o'clock, which it shouldn't, then I'm probably going to scale this back quite quickly. Just because, if the volume's there and I'm seeing the conditions, I'm going to, you know, stick to this. Otherwise, this is going to get shrunk quite quickly if I'm not seeing the conditions. Tuesday, we've got two event-driven risks, medium relevance, put about 15%. Similar for Wednesday, another 15%. Thursday, as we saw before, a lot of data points, quite a few things to look at. And they're quite of high relevance, especially I think the Chinese data comes out on Thursday as well. I'm putting a bit of weighting on that day as well. And then Friday, that's again 3 event-driven risks, medium relevance. I've put that a little bit higher than Wednesday and Tuesday just because there could be all that risk surrounding Greece. And coming into the weekend, people don't really like to hold risk assets, so there could be some flow around that Friday period. In any case, that was my weekly trading roadmap. Hope you guys enjoyed that. It's a little bit longer than usual, but hopefully we have a good trading week ahead. We saw some flows come in on Friday, which is excellent to see. Some of us didn't trade very well, but it's exciting nonetheless because there's going to be flow in the weeks and months ahead. So good luck this week. I really hope everyone does amazing. And we'll be talking again on Friday in my weekly market wrap. So have a good one and take care. Bye bye.